also. Okay.
Yeah.
আমার নাম রাশিদুল আলম। আমি হচ্ছি বাংলাদেশে এটা টেক কারিগর দায়িত্বে আছি। আর সেখানে আমাদের কলিগ আছেন দুজন। একজন হচ্ছেন Ernesto Villa. He is based in USA and he's the co-founder, CEO of our company. And our colleague, Mr. Zastovar, he is based in Europe. So we are working together, and if you have a customer, আপনার যদি কোনো কাস্টমার থাকে ডেফার্ড টার্মসের, যেটা আপনি কাজ করতে পারছেন না, ডেফার্ড এলসি হোক, ডেফার্ড সেলস কন্ট্রাক্ট হোক, সো উই আর দ্য রাইট পারসন ফর ইউ। আমরা আপনাকে অ্যাপসাইড পেমেন্ট করে দিব এবং পেমেন্ট গ্যারান্টি সম্পূর্ণ আমাদের। বায়ার যদি পেমেন্ট নাও করতে পারে, সেটার জন্য সম্পূর্ণ আমাদের দায়িত্ব। সো ডিটেলস এটা নিয়ে আলোচনা করবে আমাদের সিইও মিস্টার আর্নেস্টো। তো আমি এখন তাকে রিকোয়েস্ট করব সে তার প্রেজেন্টেশনটা দেওয়ার জন্য। Mr. Ernesto, could you please start and briefing about us?
Yep. Sure.
Thank you.
Thank you, Jose and Rashid, for the warm introduction. And thank you all for taking time from your busy schedule today to assist to this webinar, where we tend to present our solution, which hopefully leads to some knowledge, some value, and eventually be able to capture more market share and the future working together. So as a way of introduction, as Rachid said, we are a U.S. headquarter company. Our company was founded as a logistic company. We are regulated by the Federal Maritime Commission of the United States. And we became a trade financier later over the years. And our journey into trade finance started when we started providing logistics operations to our banking partners. Yeah. So these are financial institutions that were looking to have a little bit more visibility and control over their trade finance operations, as they've been hit hard with fraud. So in order for them to minimize their exposure, they wanted to have they want to be closer to the transaction in a way. As you know, funders or banks pretty much negotiate documents. So the documentary alone is too far away from the transaction. So after learning the pain points that keep all these fund managers awake at night, we have perfected our protocol in assisting all these financial institutions. And then later on, we started working with our regular clients, our regular importer and exporters that were in need for financial facility. So we were, as a trade finance facilitator, we were very effectively able to match the supply of liquidity from our banking partners with the demand for liquidity from our clients, while we were in the middle managing the physical flow through the logistics, giving everybody the sufficient comfort to transact. And recently, our friend here, Rashid, approached me insisting that we should have some presence in Bangladesh. The Bangladesh was ripe for great things, and I could not agree more. Bangladesh and specifically the garment sector is very well positioned for growth. However, we also have encountered a lot of challenges. Yeah, and what I mean by that is Bangladesh is a very regulated market in terms of financial services. It is extremely competitive. Oddly enough, there are not a lot of funders willing to take on Bangladesh risk. However, the few that are there compete very, very, very strong for their participation. So it's a very competitive market, which is is good in a way. But then there's the really big funders, they don't have an appetite for the Bangladesh risk, specifically on the SME or for the SME market, right? It's a problem not only to Bangladesh, but it's a problem globally. Yeah, so the SMEs are pretty much discounted from all financial services. Yeah, so that's where we believe there is a huge opportunity, and we'll be talking about it today. So um, um, hopefully we learn something about it. So as we were preparing to enter the Bangladesh market and preparing these webinar, we of course went to the to the leaders in the industry, which are of course the government associations, just to learn more about the current market conditions and what could be done to expand from there. And everybody agrees that the members of the association, will be more successful if you have more tools in your toolbox that would allow you to create more value, or provide added value services to your buyers. Yeah, so that's exactly what we are intending to do, as we provide real solutions, where we integrate the financial services with logistic solutions, and this is with the aim of giving funders the sufficient comfort to deploy capital into Bangladesh. Funders are okay in providing liquidity, so long they have the certainty that they'll be able to recover their funds plus their margin. Yeah, so everybody of course is on the business of making some money, but most important, they want to recover. And the funders, like I said before, they're too far away from the transaction because they just handle documentary. So they work with us, they are closer to the transaction, as we have control of the physical goods for them. And we give them full transparency and visibility, and that lowers the barriers for them to lend. And then ultimately you can create more value to your clients, and that's the whole idea, that you're sitting in a position that you create a difference to whatever is offered in the market today, that you add more value to your clients, and your clients choose you over your competitors at the time of making a buying decision. So let's face it, um, um, uh, global trade or international trade is very risky business. But when you're talking about trade finance, it is even riskier. Like I said, everybody's too far away from the transaction. So logistics is a great mitigant for most of this risk. Uh, everybody's trying to avoid fraud. Fraud is the one thing that anybody can insure. So the logistics could manage substantially some of those possible exposures. And then, of course, like I said, focus on value. Price is just the cost of goods, but value is what your clients receive. So if you keep a focus on the value you want to give your clients, that should be the winning proposition. If you just concentrate in price, lowering your cost, your margin, it's a race down to zero. So if you add value, you'll be able to make more money, and that's ultimately what we're trying to propose here. So some of the challenges that we notice in Bangladesh, it is that there is capital control. For example, the currency is not stable, and as such, the model that is common is, of course, the FOB model plus a letter of credit. And that is a model that is very secure to you, the manufacturer, because you have certainty that you get paid. However, that comfort that you have is a burden to your buyers, especially when we're looking. Bangladesh has at least on the lens of Allianz, the largest insurance company in the world. Bangladesh is deemed a risky jurisdiction. I believe it's deemed D3, which is pretty pretty risky. And then the sector, the garment sector also has some moderate risk because fashion is very seasonal, it's very fast-paced moving, and that is inherently risky. Yeah. So there is not a lot of appetite from the very large funders to take on Bangladesh risk, at least for the SMEs. The large buyers of the world, of course, they're putting their securities, and funders are good with them. But that's exactly what I'm saying, that it is secure to you as a manufacturer or as a buy house, but it's very uncomfortable for the buyers. So buyers are changing their preferences. Everybody wants an open account. Everybody wants an open account and have deferred payments. Yeah. And it is possible. It's just that Bangladesh itself is regulated. So therefore, the model that we look in screen, FOB plus letter of credit, is the most popular, is the most common. So what we're saying is you should break the mold, be a contrarian, offer what nobody offers, offer more value to your client. And then in an environment like today, that we see a lot of geopolitical risk and market risk, like, I'm referring to, I don't know, the Red Sea war that has created supply chain disruptions, or the Russia-Ukraine war that has sent waves of sanctions across multiple companies and designated individuals. These are risks that buyers would like to avoid. So the question is, do you create options for them, or you just let them battle through all these uncertainties? Yeah. So I think the manufacturer buying house that can offer better alternatives to those buyers, that'll be the winning player. So the traditional model of Bangladesh, has limitations, and we strongly believe that there's a better way, and that's what we're talking about today. So the solution that we are proposing is a DDP, or delivery duty paid model. And of course, like Rashid mentioned before, we are happy to consider all the terms. I'm just talking today about DDP because it's the closer to the door of the buyer. So you're doing more for the buyer. So in DDP model, it's just an income where the seller is responsible for everything, delivering the goods to the destination, covering all the costs, all the risk and transportation, duties, taxes, customs, and the buyers is only responsible to take the goods at their door and convert it into cash. Yeah. So when you say it that way, you're doing a lot more for your client. You're taking on all the risk for your client, or let me rephrase that. You're removing all this risk from your client. So that is a better choice. But that also comes with the price tag. That means that you could potentially make more money on your transactions because you are offering a whole package risk-free to their doors. But there again, of course, you have to comply with your local regulations, where you need to have payment certainty. So that's when we come in the equation. Yeah. So how this model works is that TechCargo pretty much advances up to 90% of the receivable face value at site, meaning once we have the goods clean on board on the water, and the balance is paid on maturity once the goods have been delivered, and we have collected. So in real terms, you're getting 100% of your receivable, less, of course, our fees to handle this for you, the discount fees and the logistic fees. But we handle everything, the shipping, the customs. We can even act as the importer of record in the United States. And when I say United States, not limited to the United States, we could do definitely Europe, Australia, Canada, UK. So not limited to the United States. Focus in the United States just because that's where our headquarters is, and of course the biggest market in the world anyway. But the cargo also is responsible for collecting, the obligation on whatever terms are agreed upon. And in case the client, the buyer is insolvent or goes bankrupt, this is a risk that the cargo absorbs. This is not, it would never get back to you. Yeah. So the benefits to the seller, of course, that they get immediate cash flow. You know, will pay you immediately. The buyer gets certainty on the costs and flexible terms. There's no dependencies of letters of credits or banks or intermediaries. All these are costly and slow. Would reduce or remove completely all the cross-border risk, because we're taking on that risk. And most important, we level the competitive playing field. And what I mean by this is that you'll be able to compete with your biggest rival. And your biggest rival, of course, is China. China is the largest wearing apparel manufacturer in the world, and they have very, very large market penetration in the United States, but also across the globe. And fundamentally, Bangladesh has the capacity, the expertise to produce as well. But I guess the one thing that is missing is the conditions that you offer your clients, and this is exactly where we're emphasizing on. I kind of have made this comparison table just to see the main differences between the current model, which is FOB plus the letter of credit, versus the DDP model that we are proposing. Yeah. On the payment risk, on the FOB model is very dependent on the letter of credit. So it is secure because the letter of credit is very secure. I mean, depending on the issuing bank, but is for the most part is very secure. But the dependency on the buyer for this is incredible. The banks are very slow and prone to to errors. You know, a small comma could send documents back or create penalties. Yeah. With the DDP model that we are proposing, not such a thing, meaning goods are confirmed in the water, reach the bill lading, and we'll give you the payment immediately. So there's nothing more to it. The logistic complexity, well, like I said, cross-border trade is complex. The question is, are you shipping all that complexity to your buyers? Yeah, on the FOB model is the buyer's responsibility, but on the DDP model, we're removing all that risk, all that complexity, not only from the buyer but also from you. I mean, we're taking control of the goods from your door, and we're delivering to the door of your client. So there is no cross-border risk to neither party, not to you, not to the buyer. On the cash flow, on the FOB model through a letter of credit is pretty much delayed. Letters of credit are very slow. Not only slow, but costly. Costly, once again, to the buyer. So I would say remove all these barriers, all these friction points for the buyers to choose you as the best choice to make a procurement decision. Yeah. Through our DDP model, you get payment on site. So those are the difference. Yeah. On the cost predictability, yeah. On the FOB model, if the buyer is purchasing at FOB point, they're exposed to many things that will happen on transit, such as tariff. We see this happening right now in the United States. Tariff, forex fluctuations, supply chain disruptions. A chip gets stuck in the Suez Canal for weeks, months, and this is an exposure to the buyer. Buyers don't want to deal with that. Buyers want it easier, or at least you should make it easier to them. So through our DDP model, that's exactly what we do. We take on all that risk and we put it at their door. And then on the market competitiveness, on the FOB model, well, it's less attractive. Yes, there are buyers buying from you. Yes, but you're leaving a lot of business on the table. You should be able to have more market share on the DDP model. I mean, when you're working on an FOB model, you are discounting anyone that doesn't have international expertise, that don't have a proper logistic in place. or maybe someone that doesn't have the capacity to collateralize a letter of credit for that matter. So when you offer a DDP term, you open yourself to a wider range of buyers that you're not participating on today. So that's what I'm saying, that you should have more tools in your toolbox. Yeah. This is the big opportunity. Yeah. Today on this geopolitical environment that we're living in, where the U.S. is imposing very high tariffs to Chinese manufacturers. This is a great opportunity for Bangladesh. Bangladesh could be the best position replacement manufacturing powerhouse. But there again, you must provide the U.S. buyers with the similar product that your Chinese counterparties or competitors are offering, which are risk-free products, are their doorstep, easy. Make it easier for the American buyers. They'll buy from you nonstop. So that's exactly what we bring into the table. Partnering with us, we work hand in hand with you. Yeah, and like I said, Bangladesh is extremely well positioned. You have the competitive price. You have a very established manufacturing infrastructure, and you have the expertise. I think the one thing missing is that you need to provide the financial structure and logistic components that make it easier for buyers to choose you. After all, that's what Chinese companies are doing, and you see how successful they are. So probably do what some other are doing that be successful. Yeah, that would be my recommendation. So in summary, our model provides benefits to you as an exporter in the way that we purchase your receivable, pay the factory immediately upon a clean onboard bill of lading. So we take on all the payment risk with no letters of credit dependencies. This will be a wire transfer immediately to your bank account. That will improve your cash flow. It would improve your negotiation with your buyers, because once again, you're adding more value to your clients, and on the more value that you offer, most likely you'll be able to improve your margin. You'll be able to make more money. Yeah. And then, of course, your buyers will be able to save on all those bank fees, letter credits, overheads, and all this operational complexity that nobody needs. It's something that is another day in the office to us. Yeah. And then, most important, you'll be able to take more market share in the United States because you're offering a risk-free kind of product. But I say United States, but not limited to the United States, of course. Yeah. For your buyers, they'll be able to have a very flexible payment terms. We're putting here 6 days after delivery, which could be similar to 120 days from bill of lading date. Yeah, between those terms, anything could be workable. Of course, provided that the buyer qualifies. Yeah. In terms of the cost, the buyers will have predicted costs because you're selling a product that is at their door. They're responsible for nothing else. So very predictability, very stable, easy to scale. Yeah. And then they'll receive an end-to-end logistics support from the cargo, eliminating all the cross-border risk. Where in the United States, of course, we have all kinds of capabilities, from warehousing, trucks, distribution, importer record, customs, free zones. I mean, we can provide an entire array of services that goes beyond just the financing elements of it. And of course, they'll be able to free their capital. They're most likely tied in letters of credit. So avoid all the letters of credit, all the bank fees, and of course defer the deferred payment flexibility. I mean, the later they take on their responsibility, the more efficient on their balance sheet, the more capacity on their insurance limits. So all of these accounts for a buyer. A big buyer analyzes all of this. This is very important talking points, which is not just your costs. You should not sell your products as the cheapest, because your products, probably you should sell it as the best value product as opposed to the lowest cost. And always focus on the value that you deliver to your clients as opposed to the price. Price is important, being competitive is important, but you add more competitiveness if you add more value. And then, of course, through this model, there is no customs clearance risk. We handle all of that for them on your behalf, of course. Yeah. So if we look at this model, what is the process? Like everything else, we need to, determine, have certainty that the buyer will be able to repay us whatever we are advancing to you. And to do that is the first thing we got to do is determine the credit worthiness and the insurability of the debtor, right? So the very large houses, everybody knows, the Walmarts of the world, those are easy to qualify. But if you're going to a more SME, smaller company, we're probably going to need more documentation. After all, if somebody's asking you for credit terms, you also need to know if they have the ability to repay you. So it's customary to require from anyone asking you for credit, uh, financials, P&Ls and balance sheet at least. Yeah. And then we also need to have a certainty that we can have an irrevocable direct repayment of the receivable. That means that before we ship out the goods from Bangladesh, we need to have confirmation from the buyer that they acknowledge their purchase order, that they acknowledge your invoice, and they acknowledge that they'll be paying us directly on maturity, whatever terms those are. Yeah. So that's a notice of assignment, customary. All of you already are familiar with this type of terms, but this is things that we need to fix ahead of time. Yeah. And then of course we have our technology stack, and we prefer for those buyers to transact in our portal with you. In other words, that the purchase orders are submitted through our portal. That gives funders, you, us, them, transparency and visibility, and it reduces any friction of questions because we're all transacting with the same source of truth on the documentation. Yeah. So that's our preference. Yeah. After deals are binded, the steps to executions are very simple. Where you as a exporter submit the performing invoice and the shipping details. When I mean shipping details, you're moving 2 containers, 40-foot containers from Chittagong to New York, right? So with that data, we're able to put very quickly a term sheet for that specific transaction, because that includes, of course, shipping costs and everything that goes on with this type of transaction. Yeah. And then immediately TechCargo will pay you 90% of the export costs, while we take on all the other costs, the logistics, the duties, and everything else that goes in there. So we need to structure your receivable in a way that all these costs are itemized in a way. Yeah. And then at the end of the cycle of maturity, the buyer pays TechCargo for 100% of the face value of the receivable, and then we pay you back the 10% or whatever balance is due to repay. So it's very simple. Nothing that you haven't done in the past in a different form or shape. Yeah. So that's our presentation. I hope is it opens you a spectrum. I hope you go home with an additional product that you can offer. You can offer your clients, and hopefully that will make you win more business. I'm gonna be in Bangladesh next week. I know Rachid has a full schedule for me, but if you'd like to meet, this is something that you want to explore, reach out to Rachid, and we could probably squeeze you into our agenda next week. But things that we're doing, for example, we're flying to the United States with a manufacturer, just visiting their clients, just to put this type of structures in place. So we're very hands-on. We want to walk hand by hand with you. We want to partner with you in enabling this type of business. So that's our main goal. So anyway, we have a few minutes now for Q&A. So if you have questions, feel free to put them in the chat. Jose, if you can open the chat for everybody.
It's open. Yeah.
Yeah. So if anybody has questions, just go ahead and submit them now. Yeah.
Thank you, Ernesto, for your presentation. That is always very worthwhile and helping to understand the model and the situation worldwide about garment business. Well, the chat is open right now, so if somebody has some question that would like to be attended, please feel free to make it right now through the chat. I have a question.
কোশ্চেন থাকে, আপনাদের যদি কোনো প্রশ্ন থাকে, ওপেন চ্যাট আছে, ওখানে আপনারা লিখতে পারেন, উই উইল অ্যানসার।
By the way, this session is being recorded, and we'll do our best effort to translate it to Bangla and share with all of you that register for this podcast today. So, it's something in the Escape. Like I said, we'll do our best. We'll give it our best shot to translate it to Bangla and share with you all. Yeah.
That's actually the first question that we are receiving. Is they can get the PPT follow later.
Yes, definitely. Yes. So whatever you saw today, we'll share today in the form of video, and we can also put together, a company with the slides. And like I said, we'll do our best to translate it to Bangla. So Rashid, you'll be busy.
Yeah, no problem.
I have another question here. Is what happens if the buyer doesn't pay or goes bankrupt? Who assume the financial risk?
Rashid, you want to answer that?
Yeah, I am here. Okay, buyer যদি let me explain বাংলা। buyer যদি পেমেন্ট করতে না পারে বা ব্যাংকরাপ্ট হয়ে যায়, এটা হচ্ছে আমাদের লস। কারণ আমরা আমাদের ফরওয়ার্ডিং এর মাধ্যমে বায়ারের ওয়্যার হাউসে মাল পৌঁছে দেবো এবং আমাদের ব্যাকআপ ইন্স্যুরেন্স আছে। তো এখান থেকে আপনারা আমরা আমাদের সাপোর্টটা পেয়ে যাব এবং আপনারা ফুল অ্যামাউন্ট পেয়ে যাবেন। আপনারা লুজার হবেন না এবং আমরা এটার জন্য আপনাদের কোনো ক্লেম করব না যে আমাদের এই টাকাটা ব্যাক করার জন্য। তার মানে বায়ার যদি ব্যাংকরাপ্ট হয়ে যায়, পেমেন্ট করতে ডিলে হয় বা যে কোনো প্রবলেম হলে এটা আমাদের প্রবলেম, আপনাদের না। You will get full payment from us.
Okay, I have another question here. Is does Descargo handle all logistics and customs, or can we use our own freight forwarder provider?
I can answer that. So yes, TechCargo handles all the logistics. Put it this way: if the term is DDP, that means that the logistics responsibility falls onto the seller. But since we're paying you at export point, I mean, it is our exposure. We want to make sure that we deliver to your buyer as expected. In other words, we want to inspect the goods, meaning that you manufacture the goods in accordance to your buyer's specification. And we want to make sure that we deliver those goods to your buyer in those same conditions as efficiently as possible, as quickly as possible, as cheaply as possible. So that I hope that answers your question. It is our exposure. We want to make sure that we complete the trade as expected.
Another question is, if sellers wants to discount export bill before payment maturity date, how much interest?
Well, I don't know, Richard, if you understand that, but my 2 cents will be depending on the worthiness of the buyer. But Richard, go ahead, you can expand on it.
Yeah, I think we can do this. If your buyer pay us earlier, so your charge will be reduced from that.
Correct. So just to illuminate a little bit in there, our product is a 30-day minimum. Fundamentally, logistics is more than 30 days for the most part. but then there is every day thereafter. Yeah. So if we say that the term is 60 days, but they pay in day 35, you would
Yeah.
only be paying for 35 days as opposed to
Correct.
60. Yeah.
Correct.
Okay, we have another question here. Some buyer doesn't open their bank name. They pay through third company or finance company. In that case, how the Descargo works?
Yeah. So, very good question, because this has happened a lot in the past, where the buyer has already a factoring company in place that are willing to
Yeah.
discount their receivables. In that case, we can work what is known as a intercreditor agreement, where we get into an agreement with that said factoring company, and once we deliver in the DDP terms, meaning the receivable is due on destination plus whatever terms, and then the factoring company will take us out of position, pay us, and then we release the goods to them, and then they carry the remaining of the days on the facility. So yes, we can definitely do that.
Okay. What are the key steps to start working with Descargo under the DDP model?
Rajit?
Yeah. First of all, we need the buyer financials. Financial means audit report or balance sheet, whatever it is. We have to check the buyer credit. If the credit okay, then we can go forward, and we can add DDP charge or LDP charge if it is FOB. So you have to calculate FOB charge plus the freight and DDP charge. Then you can offer your customer.
Correct. Yeah. So just to recap on that, the very first step is validating the capacity of your buyer, the repayment
Correct.
capacity, based on that, if there's capacity or credit limits, then we move into a proper onboarding. That like every onboarding, there's KYC, AML. The first days, the first time is a little bit of friction, because a lot of documentation needs to be presented, but then it becomes a cookie cutter. It be just submit an invoice and off we go. Yeah.
Okay, I have another question here. Is buyer will pay based on copy documents through a sales contract. In this case, how Descargo will work?
Okay, so there'll be a sales contract between you and your buyer, of course, which will govern the relationship. The documents are not copies, fundamentally, because TechCargo handles the logistics, meaning we issue the bill of lading. So we'll give you, as a manufacturer, the original bill of lading, so the bank endorses it. So once we have the goods clear in water, we'll issue bill of lading to you, pay you endorse it, bring it back to us. So that's how. Since we're handling the logistic ourselves, we are the issuers of it. As a matter of fact, the cargo to the United States will be traveling under the cargo's FMC license bill of lading. Yeah, which is it's an OTI bill of lading.
Okay. And I have another question here. Is buyer wants 30% CAD and 7% LC in 90 days. Factory wants 30% advanced DT or outside LC. How you can help me in this case? Please offer your procedure.
This is a very mathematical question here.
Yeah.
But in general terms, if your client wants to pay with a letter of credit for the portion of it as a deferred payment, it's okay. We can accept a letter of credit as a payment method of payment. I would probably suggest if they have the capacity to open a letter of credit, probably they have the capacity to repay. I would probably look at their financials first, and then if there is no need for them to incur the expenses of letter of credit, we can extend whatever term they want under those scenario, and then instead of the discount being to you, the discount will be to them. So all of these things could be structured, and of course we gotta see each one transaction, one, the ones that are outside of the mold, we gotta look at them individually and propose a structure that makes sense. But if they wanna pay us with a letter of credit, we equally okay. Once again, no longer is the risk, the payment risk of the debtor is the payment risk of the bank. So depending on who is the issuing bank of that letter of credit.
The same person continue this same question, asking, what will be your charge basis on your?
Yeah, so the charges vary. Yeah, so the charges are, or the discount fees, let's call it that. It depends on the risk profile of your debtor as opposed to anything else. Yeah, so if your debtor is one that has a very good credit rating, well, the discount will be very low. But if it's different, it will vary. So if I had to give you today a range, it would be a very wide range, because we could do as low as I don't know, 1.2% per month for the Walmarts of the world, to maybe 1.8, 1.9 on the less fortunate debtors. But it depends. It depends on the instruments for collection and the soundness of your debtor fundamentally. Yeah.
Okay. As we are working as trading company, there will be two value: invoice price to maker, invoice price to buyer, including duty and freight. So Descargo will pay on DDP value.
Correct. Except that the duties and logistics is monies that you owe to Tech Cargo. So Tech Cargo would not advance payment on those to you, because those are payments that need to be made to a third party. Yeah. So we'll pay you on the cost of goods basis. Yeah.
Okay. In case using Descargo as our logistic provider, ISF will be issued in which company name for us custom clearance?
Very good question. So there's two ways. Tech Cargo has a trading company, it's called Tech Trade, which acts actively as an importer of record for many of our clients. That's a way. Another way is that we can create your company a foreign company AN number in the United States, and create a foreign company customs bond under your company name and AN number, and then you could be the importer of record in the United States. If that's the case, then the ISF will reflect you, foreign entity registered in the United States, as the importer of record, and that's the way it should be. Alternatively, Tech Cargo could be, or Tech Trade, our trading company, could act as the importer of record, which is a service that we provide as a logistic company for many of our clients.
Okay. No more question at the moment. We have received in the screen, you can see the Ernesto and Rashid emails, also the QR code. Well, thank you again, Ernesto, for the time, the presentation. Thank you, Rashid, for your apporting value here.
No, thank
Go
everybody
ahead.
for your participation. Very engaged crowd. I'm looking forward to meeting some of you in Dhaka next week when I'm there. And equally, if you need assistance in talking through the proposition with your buyers, we're here to help. Like I said, we're available through email to do meetups. But if you need us to travel with you to meet some of your clients, we also have teams to do so. So don't be shy. Think of us as your internal logistic provider that also provides funding. So we want to partner with you and help you gain more business in business you're not participating today. So I think this is a very innovative way, very creative way, and just to compete with your biggest rival with your Chinese manufacturer. So as Rachid said, the moment is ripe. This is the moment for you to seize this opportunity. So don't let it pass. That's it. So thank you all for being here today.
Thank you to everybody. Have a
Thank you,
nice day.
too. Thank you, everybody. Thanks for your time.